Good morning, restaurant owners, and welcome to this week's live Facebook training. My name is Tim Cernett. I'm the founder of Financial Optics, where we help independently owned restaurants operate by improving profits and cash flow through financial clarity, actionable financial insight, and strategic foresight. I'm back with our weekly live trainings, and I've got a lot to share. I took a couple months off from these weekly trainings. Well, we retooled how Financial Optics works with restaurant owners. The short version, we sharpened everything around helping independently owned restaurants build stronger financial systems, because that's where profits and cash flow actually come from. More on that in the weeks ahead, but the weekly trainings are back. And I'm starting with a topic that sets everything else up. Let's get right to that while I share my screen. And there we go. This week's topic is the 5 moves that separate profitable restaurants from the rest. So hold on here. There we go. Okay. The profit gap. It's real. Here's something that I'm trying really hard to change in the world of restaurant owners. I call it the profit gap. The average independently owned full service restaurant is operating at a 3 to 5% bottom line profit or worse. Some don't actually know exactly where they stand, which might even be a little bit scarier than operating at those low profit margins. Hold on here. I got to move something around on my other screen. Meanwhile, well-run restaurants, and I'm not talking about the massive chains with corporate infrastructure. I'm talking about independent operators who's gotten their financial systems right and are hitting 10%, even 15% or better bottom line net profit. That's not a small gap. On a $2 million a year restaurant, the difference between a 4% and a 10% bottom line profit, that's $120,000 a year straight to the bottom line. Same restaurant, same market, same challenges, different systems, different decisions, different outcomes. So in the next 12 minutes, what I'm going to walk you through are the 5 moves that create that gap, and more importantly, how you can start to close it. These aren't secrets, they're disciplines, and every one of them is within your reach. Heading into 2026, ingredient costs are elevated and unpredictable. Labor is still one of the most competitive expenses you manage. Margins are under pressure from every direction, and the restaurants that thrive in that environment aren't the ones working harder. They're the ones with better visibility into their numbers and better systems for acting on what they see. So the 5 moves are getting your accounting systems right, building the financial plan that works, controlling prime costs through weekly efforts, engineering your menu for profitability, and mastering your cash flow. Let's get into each of these moves individually. So move number 1 is getting your accounting system right. The accounting system is the foundation of everything else we build on. If it's strong, everything downstream, your food cost numbers, your labor analysis, your cash flow picture is unreliable if the accounting systems are not set up correctly. And what we're talking about is a customized chart of accounts inside of your accounting software. Your chart of accounts needs to be built for a restaurant, not a generic small business. You need to see sales broken down by food, beer, wine, liquor, non-alcoholic beverage, and you also need your cost of goods sold broken down in the same way. You need back of house labor and front of house labor separated. If your chart of accounts doesn't give you this level of detail, your financial statements can't tell you where the problems are. The other part of getting the accounting system right is having a cloud-based accounting hub. QuickBooks Online are equivalent as your centralized command center. QuickBooks Online is by far the most popular for independent restaurants. With an online cloud-based accounting hub, you can start to get real-time visibility if all the other systems are working correctly, which we're going to get into, to create that real-time visibility so that you don't have reports that show up 3 weeks after the month closes. You've got reports on a week-to-week basis that give you insight into how your restaurant is operating. That takes an integrated tech stack, the next item on getting your accounting systems right. Your point of sale, your payroll, your bill pay systems, they all need to be synced to and communicate with your accounting hub, your cloud-based accounting hub. If you're manually entering data from one system to another, you're wasting time, you're introducing errors, and you're losing the speed advantage that technology is supposed to give you. We're going to go much deeper on financial systems and technology integrations later in this training series. For now, just know this: if your numbers aren't real time or as close to real time as possible for a small business, and that's very close, and restaurant specific, they're not helping you make decisions. They're just compliance documents for your tax return, and that's a waste of effort. So let's move on to move number 2, building a financial plan that works. A financial plan is your restaurant's GPS. And by financial plan, really what we're saying here is budget. I don't really like the word budget, so I prefer financial plan, but that's what we're talking about. Building a budget that drives your restaurant. Without one, you're driving without a map and you're hoping you end up someplace good. So with that budget, you need to define success for your restaurant, not some generic benchmark, but what does success look like based on your concept, your price point, your neighborhood, your values? What does it mean to you? Are you looking for more cash in the bank, higher profit margins, reduced personal stress, a better work-life balance for you and your team? Start there on how you define success. Then I move this slide up a little bit. The 12-month rolling operating plan. This is building a rolling budget that looks out the next 12 months and is always looking out the next 12 months. So you review the past 12 months for actual performance, what happened. And if you don't have that restaurant-specific chart of accounts that we talked about, you're not getting insight into how your restaurant's actually operating. So build that restaurant, get your accounting systems set for your restaurant. Then you can start to build your plan by looking at the past 12 months of actual performance. Project out the next 12 months, starting with what you expect your revenue to be by category: food, beer, wine, liquor, non-alcoholic bev. Then you build out your prime cost, then you build out your overhead, and this is your roadmap. As you're building that out, set your KPIs and your targets. KPIs are your key performance indicators. Those are things like your food costs as a percentage of food sales, liquor costs as a percentage of liquor sales, and there's other KPIs that we're going to get into in future trainings. If you don't define what good or even great looks like for each line of your operating plan, you have no way to measure whether you're winning or losing. Set achievable targets, but stretch yourself, stretch your team to improve on what history has told you how you've operated. Then track against those targets and analyze on a month-to-month basis. So building an operating plan or a budget that actually works for your restaurant is in its own training that we'll cover in detail in a few weeks. But here's what I want you to take away today. If you don't have a 12-month financial plan for your restaurant, you're making decisions in the dark. You're reacting to history, and those decisions rarely lead to more cash in your bank account. Excuse me. Let's move on to move number 3, and that is controlling prime cost with weekly disciplines. Prime costs are your food, beverage, and labor costs, and that's where the money is. This is where most restaurants find $25,000 to $100,000 in hidden gems, and it comes down to simple tools used consistently. So food cost controls, simple things like inventory systems, taking inventory monthly, if not weekly, and we're going to talk about weekly habits, waste tracking, key item tracking, weekly sales projections upon which you can base your labor projections and your labor targets for the coming week. These aren't complicated. They just require consistency. And consistency of applied tools is what separates restaurants making 10% from the ones making 4%. It takes effort and consistency. Labor cost tools, staffing guidelines, scheduling based on productivity data, sales per hour, customers per hour, shift management, manager shift cards. Ideal labor isn't the cheapest labor. It's the fewest hours that produce the best guest experience consistently while maintaining profitability. The weekly review rhythm. You've established your you've implemented food cost tools, you've implemented labor cost tools. The weekly rhythm is comparing actual to what you anticipated, analyzing, adjusting, repeat, compare, analyze, adjust, repeat. This isn't a monthly exercise. By the time you see a problem on a monthly P&L, you've already lost 3 or 4 weeks of margin. Weekly reviews catch problems while you can still do something about it. Let's look at the math on this. Let's put this into dollars. If your restaurant is doing 1.5 million in annual revenue and you drive your food costs down by just 1 percentage point, and you drive your labor costs down by just 1 percentage point, that's $15,000 each straight to the bottom line. And 1 percentage point is not a major move. Implementing some of these simple tools should impact your prime cost percentages by more than just a percent. So $30,000 from 2 small incremental improvements, and I haven't even touched your menus yet. We have dedicated training on these food cost tools, menu engineering, labor strategy, and labor budget coming up in the rotation. Each one of these goes deep on the practical tools and systems. Today, what I want you to see is how they fit together, because prime cost control isn't one thing. It's a system of disciplines working together. So we mentioned the menu. Engineer your menu for profitability. Every dish on your menu should earn its place. Menu engineering is where financial clarity meets operational execution, and it's often where the biggest hidden profit lives. And it starts with detailed recipe costing. You need to know the exact cost of every plated item, not an estimate, not a guess, the actual cost based on current ingredient prices, yield, and portion size. And with today's tools, you can get to current ingredient prices as of today. If you don't know what the dish costs to put on the plate, you can't know what it's contributing to your bottom line. And that leads to the next topic, contribution margin, the concept of contribution margin over food cost percentage. Most owners focus on food cost percentage, and that matters when analyzing the big picture. But contribution margin, the actual dollars, cash money a dish puts towards paying your bills, tells the real profit story. For example, a $28 entree with a 35% food cost contributes more dollars than a $14 appetizer with only a 25% food cost. Both metrics matter. Contribution margin is what drives your bank account. And contribution margin is what we use to do the menu mix analysis and the menu engineering. What's actually selling? What's each item contributing into the contribution margin? So you're going to end up with stars on your menu, workhorses, puzzles, and dogs. Once you see your menu in that lens, the strategic decisions become obvious. What to promote, what to reprice on your menu, and what to retire from your menu. The last item is portion control. Even the best engineered menu falls apart without consistent execution. A 10% overportion on a dish with a 30% profit, our food cost, pushes that dish to 33% food cost. If you multiply that across thousands of plates, that's where you're watching margin dollars walk out the front door. So menu engineering is, that's easy for me to say. Menu engineering is one of the most powerful profit levers you have, and we'll dedicate an entire training to it so you can get to see the details inside the what contribution margin actually is, the menu mix analysis, and how you drive more money to the bottom line. For today, if you take nothing else away, start to figure out what your exact recipe costs are, know the contribution margins on each of your plated items, and make sure your team is executing on portion control, portion consistency. Okay, move number 5. Master your cash flow. Profits and cash flow are not the same thing. You can be profitable on paper and still run out of cash. That's not bad luck, that's bad planning, and you can fix it. So that comes from balance sheet awareness. Most owners live in their income statement, which makes sense, and I understand that, but they never look at their balance sheet. That's where cash lives, and that's what moves the needle on cash. That's where debt lives. And paying down debt is not reflected on your profit and loss statement. That's where the full financial picture comes into focus. And that's where inventory management also comes into focus on your balance sheet. A cash reserve discipline. Your restaurant needs a cash cushion. That's a concept that a lot of small business owners don't deal with well because they're living week to week, month to month. But with the right profit percentages built in with some of the tools we're talking about, you can start to build a cash reserve. Not because things will go wrong, but because things will get unpredictable. Seasonal swings, equipment failures, supply chain disruption. We all know about that with the recent activity over the last 4 or 5 years. Cash reserves are what keep those moments from becoming a crisis. Strategic financing. Not all debt is bad. Equipment that drives productivity, strategic expansion, infrastructure upgrades. These can be smart investments, and debt is a good tool to achieve those. But high interest credit cards, merchant cash advances, stay away from merchant cash advances, and borrowing to cover payroll, that's a different story. And knowing the difference is part of financial mastery. We'll dig into cash flow and debt management and dedicated trainings later in this series. The takeaway from today, strong profits and healthy cash flow are outputs of a strong financial decision. If you're profitable but still feel cash strapped, the system has a gap somewhere, and that gap can be found and fixed. So the 5 moves, one integrated system. Starting from the upper left, your accounting system. Get your accounting system right because everything starts with reliable numbers. The financial plan, build a financial plan that works for you and your restaurant because you need a destination before you can navigate. Prime cost controls with weekly discipline because that's where the hidden profit lives. Menu engineering for profitability because every plated dish on your menu should earn its place. And then mastering your cash flow because profit on paper doesn't necessarily pay the bills. You need to understand the cash flow through the balance sheet lens. These aren't 5 separate things. They're a system. Each one supports the other. When they work together, you get financial clarity. And financial clarity is what turns your hard work into real lasting prosperity. Okay, now, if you're listening to this and thinking, I'm not sure where I stand on some of these things, that's normal. And that's a valuable realization. Most restaurant owners know they have gaps in their financial systems. They just haven't had a clear way to see exactly where those gaps are. That's where I created a free tool called the Restaurant Financial Systems Scorecard. It's a free self-assessment that walks you through the key areas of your restaurant's financial infrastructure, your accounting setup, your prime cost visibility, your planning, your cash flow systems. It shows you where you're strong and where the gaps might be costing you money. It takes about 15 minutes. This is not a high-level assessment, but when you're done, you'll have a baseline picture of where your restaurant stands inside of its financial systems. Not a guess, but an actual score across the areas that matter the most to your profits and cash flow. I'll drop the link to download the scorecard in the comments below this video. Take the scorecard, see where you stand, and I think you'll find it's one of the most valuable, useful 15 minutes you'll spend in your business this week. Next week, we're going to do a deep dive into the move 3 we just covered, food cost control. I'll walk you through some simple tools that unlock hidden profits in your kitchen without cutting quality or changing your menu. You won't want to miss it. Thanks for joining me this morning. I love talking to independently owned restaurants. Have a great week, and we'll see you next week.